Well, that's true. Thanks for tuning in to the Mutual Fund Show on Bloomberg Quint. And if indeed you have a vice like having a beer, three beers a weekend, comes to around 500 rupees as the plate showed, 2,000 bucks a month, invested instead in a normal mutual fund, a monthly SIP of 2,000, amount invested over 10 years, a staggering 2.4 lakhs at an average 15% return. The expected amount after 10 years, 5.5 lakh rupees. That's the power of investing in an instrument which is tax free and compounding at 15% per annum. Welcome to the Mutual Fund Show. Just a quick perspective. We've started doing this now for the last couple of weeks and try and show you why is it that any investor should invest in mutual funds. Just a quick plate out here. This is the asset class performance over the last 10 years. Some of these could vary depending on the geography you choose, depending on the asset that you choose, but the banked fixed deposit over the last 10 years has grown. Well, if it was 100, let me get you the numbers. It would have gone to 1.79. If you're invested in real estate, suburban Bombay, we've chosen last 10 years. If you vary the time periods a little bit, it could go up or down a little bit, but for argument's sake, 10 years, it would have gone up to 1.87. An underperforming mutual fund, and this is also because we've chosen the period of 2007 end, after which the markets collapsed. Had you chosen 2006 and done 10 years, the numbers would have been different, but an underperforming mutual fund would have given you returns of 1.97%, gold would have gone to 2.69, and an outperforming mutual fund, after 10 years, the amount would have gone up to 3.71. This is of course the representation on charts, and clearly you see that yes, there was a bit of a dip in mutual fund investments, but if you invest in over a long period of time, 10 years, the returns until now in the last 10 years have outperformed. I'm sure these numbers would probably hold true if you choose a period of 15 years or probably 20 years as well. The question is this a good time to enter into mutual funds, and if so, what should you bet on? The theme for this week is for investors who don't mind taking that little bit of a risk but want to invest in predominantly equity linked funds. Higher the risk, higher the returns. Is that the same for mutual funds? What funds you should bet on? Let's welcome our two experts and get them on board to speak about their thoughts. Need no introduction, you've seen them a number of times over the years on television channels. Gajendra, Kothari, Harsh Roongta. Gentlemen, thank you so much for joining in on the Mutual Fund Show. It's a pleasure having you. Mr. Roongta, what should an average investor's approach to investing in mutual funds be currently? Is this a good time? Should they choose SIPs over lump sum investments? Should they wait for the markets to correct? What should they do?
So I think just a little bit on the data that you just showed, even if you compare, you're comparing, say for example, bank fixed deposits or gold, these are all pre-tax returns.
Yes.
There would be tax to pay. True. Whereas what you get on mutual funds is after, on equities right, rather, is after taxes. So to that much extent, they overstate the returns from bank FDs and gold. But more importantly, I think the good thing about mutual funds is every time is a good time to invest in equity mutual funds. I mean, somehow mutual funds and equity mutual funds have become synonymous.
Right.
But any time is good to invest in equity mutual funds as long as you are investing for long term, and by long term I mean 8 to 10 years. If that is your investment horizon, any time is good. That is the beauty of mutual funds. And if you are investing systematically, you need not even bother about timing. You can start your SIP at any time without worrying whether the markets are too highly priced, they are going to go down, whether the markets are depressed and probably going to go down further. The beauty of a systematic investment is over long periods, 8 to 10 years, is it will see these two cycles anyways.
Okay. If your son had investable money right now, you would be comfortable telling him to start an SIP tomorrow?
I have asked my son to start an SIP. The day he started earning was the day he started a monthly investment into a equity mutual fund.
Okay, fair call. Now, Gajendra, I believe your thoughts were that mutual fund investments are different for different time frames.
Yes.
Would you elaborate on that? Is this a good time frame for people to start investing in equity-linked mutual funds?
See, an investment guru has once said, the right time to invest is when you have money, and the right time to withdraw is when you require money.
Right.
So actually, any time, as Harsh mentioned, is a good time to invest, provided you have a long-term horizon. When you're investing in equity mutual funds, it's it goes through cycle, and you have to go through the full one cycle
Right.
to see the right performance.
Yeah, as our chart shows here, the turquoise blue line, if you look at the whole cycle, you probably ended up with higher returns.
Exactly.
Right.
But if you would have jumped the ship midway,
Right.
you would have had a bad experience.
So the cycle, according to you, is
It at least should be 7 to 8 years.
at least 7 to 8
You
years.
should be able to ride both the trough and the bull to see an average performance. here.
Okay.
Yes. If you're lucky, you may ride only the bull. but
Sure.
There are very few people who can time it.
Of course.
That's why we say time, be there in the market, not just time it.
Okay.
So if you are coming into equity ISAs, at least 5 years plus, and the longer you can hold, the better your performance will be.
Okay. So the advice from both of you is, if you have money right now, it's a good time to start investing. Don't bother about the market levels.
Exactly.
Okay.
I always tell people, so today let's say Sensex may be at 30,000. In 10 years time or 12 years time, it is going to actually touch 1 lakh. It's just a mathematical number, So whether you're investing at 30,000 or 28,500 or 31,500, does it really make difference if the outcome is 1 lakh?
Got it.
So
Sure.
you can't time it to the perfect,
Okay.
So
Yeah.
be there.
That's good advice.
I mean, if you look at past data,
Sure.
if you've not looked, I mean, say Nifty was launched on 3rd November 1995. If you ever did a 10-year SIP without bothering about whether the market was up or down, right?
Right.
From 3rd November 95, today we are sitting in June of 2017.
Yes.
Right? So you had a period of 22 years, which means if you take a 10-year SIP, okay, you're talking of at least 12 years of starting a SIP.
Sure.
There are roughly 2,800 possible SIP starts you could have done.
Right.
And each of these SIPs would
have
have
been
gone through
Crest and
market
troughs.
ups and downs. There is, if you take Nifty as an example, the minimum possible return that you would have got at the end of 10 years would be 6 point odd percentage.
Okay.
That would be February 6 to February 2016.
Sure.
That SIP would have ended the minimum.
Okay.
The maximum that you would have got would be 27%.
Sure.
That would be 98 to 2008, January 98 to January 2008. Average you would have got is about 15.5%, 15.6% actually.
Okay.
Now, the issue is, although not a single 10-year SIP ended in the negative,
Sure.
but 99% of those SIPs had negative returns sometime during those 10 years.
Sure.
As Gajendra said, in fact about 30% of them had negative returns, negative. It was not even making the money that was invested after 5 years into a 10-year SIP.
Okay.
And those were the SIPs that made the highest returns.
Okay. So if you stayed the course, you would make money. If you get out midway, you probably will not have
And
money.
in between, you
Sure.
are invariably going to have losses. I think if you are prepared for those losses and if you stay the course, you will make
Okay.
money.
So that's sound advice as well. If you are indeed entering into a mutual fund investment, ideally for 7-8 years. I know a lot of you have questions. What if I have a goal-based investment in plan? What if I want to go to Europe 4 years down the line? And if I want to start an SIP, does that mean that this is not the route? We will talk about all of these as well. But because this episode is dedicated towards people who don't mind taking the risk, the additional risk, and want a higher exposure to equity linked funds, we thought it best to first get in Jayesh Khilnani from our research desk, who does the research for this entire show, to try and give you a sense of what's the quantum of returns that some of the equity linked funds with higher equity exposure have done, mind you, over a 10-year period. Over to you, Jayesh.
Thank you so much for that, Neeraj. Well, over the last 10 years, we have seen high returns delivered by some of the mutual fund schemes. Let's have a look at some of them. In the large cap category, Quantum Long Term Equity Fund has given you return of 280%. In the mid cap category, Sundaram Select Fund has given you return of 370%. In the multi cap category, IDFC Premier has delivered 395%. And in the small cap space, DSP BlackRock Microcap has delivered nearly 5 times returns. Now you can see the returns tend to increase as we move from large cap to the small cap space. But the key question, can this performance be repeated over the next 10 years? Well, we'll have to find out from our experts. Back to you.
Okay, that's very interesting data. Now, the key is, and very interestingly so, and maybe correctly so as well, I have the recommendations from our guests for the equity linked funds, and they differ from the data or from the returns that Jayesh spoke about. So, let's get in the thoughts from our guests on what is it that they are recommending from different, on different parameters with regards to mutual funds, large cap, multi-cap, small cap funds. What is it that they would advise people to do? Mr. Roongta, I'll start off with you first. Recommendations for a large cap fund. What kind of investor should choose this? What's the fund that you're recommending and why?
So I think
we'll try and make it a bit of a rapid fire. Yeah.
So okay, the big thing is large cap will be there for every equity investor.
Okay.
What proportion will differ from investor to investor?
Okay.
So to whatever extent large cap is there, okay. I have recommended SBI Blue Chip.
Okay. Any reasons? For
So
this one
we have
compared to the others?
So we have a way of looking at the performance over 3 years, over 5 years, which is based on how often it has beaten the index, what's the Sortino ratio, what's been the average return, and then ranking them peer wise.
Okay.
And on that ranking, currently SBI Blue Chip is the highest. But let me reiterate, the bigger thing is choosing where to invest. Large cap, so if you want to invest in large cap over long periods, it will not matter hugely whether you have invested in SBI Blue Chip or you have invested in ICICI Pru Focus Blue Chip.
Okay, I have a counter question to that, but before that, let me get in Gajendra's fund as well. Gajendra, what is the large cap fund that you would recommend? Keep in mind, this is from a perspective of an investor who doesn't mind taking risks.
Absolutely. So I would, I would not say you should go with a pure large cap fund. You should rather go with a multi-cap kind of a
We are going to that category as well. But
right.
if you, okay, fine. You, if I'm not wrong, Gajendra, okay, fine. You are recommending that leave out a pure large cap fund because you can choose a multi-cap fund as well.
Yes.
Okay.
Because it's an all-weather fund,
Okay.
and it's a pure diversified fund in true nature. The fund manager can go to any camp actually.
Okay.
And in this space, my recommendation would be a Franklin India Flexi Cap fund.
Okay, I'm going to come to that, Gajendra,
Right.
because we have a multi-cap fund category
Sure.
discussion. But I just have a question to
Right.
both you and Mr. Roongta,
Right.
that Jayesh's analysis showed that the quantum long-term fund has done exceptionally well, not just over 3 years, but over 10 years. Over 10 years, Jayesh's analysis shows that that fund has given returns of 280%. Now, why is it that, or should one choose this fund? Gajendra, my first question is to you, that have you studied the quantum long-term fund and do you think it's a good fund to invest in?
It's an amazing fund, I would say.
Okay.
It's a great fund. It has a 10-year track record now.
Right.
Okay. But the difference in returns, what you may be seeing, is because the expense ratio of quantum long-term equity fund is capped to 1.25%.
Okay.
But many of these other large cap funds run an expense ratio of 2.25 to 2.5%.
Okay.
And over a 10-year period, that 1% extra can be a great dampener in terms of returns.
Yeah, sure. But as an investor, I'm not bothered about that, right? I shouldn't be bothered about why is it that the returns are lower or higher in a fund. I am concerned with the eventual return.
Right.
Is that?
No, because the eventual return is a byproduct of expense. If you
Right.
have, if you
True.
have large expense.
So if I'm an investor, I'm happy with that, right? That I'm getting 280%. So why should I be bothered about this?
Right. No, what I'm trying to say is that it's not an apple to apple comparison.
Okay.
Quantum has delivered this kind of performance because it's a lower expense ratio.
Okay.
Okay, so which means you are going directly to a fund.
Sure.
If you would have been going through an advisor, the expense ratio would have been higher.
Got it.
And that's where the little difference is.
So Mr. Roongta, why would you choose an SBI fund over some of the others over a quantum long-term fund?
So I think if I think the figures are right, Jayesh has chosen one particular 10-year period.
Sure.
Right.
The last 10 years. Yeah.
Last, exactly. I mean, say 10 years ending today.
Yeah, or yesterday.
Right.
Yeah.
That's like saying, and I have to say that quantum long-term equity is an excellent fund.
Sure.
And I did mention right at the beginning
You
that
can
it
choose.
won't make that much of a difference
Right.
whether you choose SBI Blue Chip, ICICI focused blue chip or long term
Yeah,
equity
we're not
for
trying
that
to
matter.
say that one fund is bad over the other. I'm
Right.
just trying to get
so
your
the
rationale
reason,
here.
so
Yeah.
the reason I mentioned that is this is much like choosing who will I have in my team, Sachin Tendulkar or Brian
Virat
Lara
Kohli. Okay, fine.
or Virat Kohli.
Okay.
Okay. Now that depends on my needs, the pitch, etc. More importantly, who's the man in form immediately.
Okay.
All of them are great players.
Sure, okay.
But who's the man in form in a particular manner?
Got
The
it.
way we check is who's the man in form over the last 3 years, over 5 years.
Got it. Okay.
So that, I mean, that is just our way of choosing.
But you are comfortable recommending this fund because the man is in form currently for the next 10 years. You are fine doing that.
I'm not restricted to continuing to recommend that. Today, that is a good fund.
Got it.
If
Of course.
if it falls behind,
Yeah, of course. Then the
we can
recommendation
stop.
may change.
Okay, the recommendation would change, and you can stop us. That is the beauty of a mutual fund. I
Yeah.
can stop my SIP in one fund
Sure.
and go to another. I can even take out my investment from one fund and go to another.
Got it.
That is the flexibility that the fund
And
gives.
which brings out the point, viewers, that much like equity investing as well, while yes, you can sleep peacefully if you're invested in mutual funds, but it'll pay to probably either have a financial advisor who is looking at your investments, or if you're doing it yourself, to monitor them. It's not about looking at them daily, but it pays to monitor them, look at some developments that may have happened if you have thematic or sectoral funds. Don't just put in money and then say, okay, I'm going to sleep. It might still turn out to be a great idea, but it probably pays to just have a little bit of monitoring of these funds, or have a sound financial advisor who is helping you with your mutual fund investments as well. Gajendra, let's come to the multi-cap category. You've said that you would prefer a multi-cap fund over a large cap fund any day. Now let's talk about people who want to deliberately choose a multi-cap fund. What is the fund that you would invest and why? What kind of investor should choose a multi-cap fund?
Of course, as I mentioned earlier, anybody who has a 5-year plus horizon can go for a multi-cap fund. The beauty of multi-cap fund is it's an all-weather fund. You can go to large cap, mid cap, and small cap. My pick in this regard is a Franklin India Flexi Cap fund.
Okay.
It is a fund. It's a vintage fund in the sense it has a 12-year track record. Okay. And I've been watching this fund for the last 10 years, and it has had a very kind of consistent performance. And the fund manager is a thoroughbred fund manager.
Yeah.
Has a excellent track record.
Right.
And today, if you see the positioning of this fund is tilted towards large cap.
Right.
80% of the fund presently.
Okay.
Because mid caps are expensive, small caps are expensive. So it can take a call where there's value.
Sure.
And the fund size is also around 3,000 crores, which is manageable.
Right.
It's not like a 20,000 mega corpus,
Right,
which is
right.
difficult, to
Yes.
give alpha.
Yes.
So with all these factors, I would go ahead with Flexi Cap fund, and
Okay. That's
investors should
interesting.
choose that for 5-year horizon.
That's okay. So that's Gajendra's recommendation. And let me ask you, you chosen the Franklin House as well. You going for the high growth companies fund, if I'm not wrong, in the multi-cap fund. Why this one?
So again, my logic again is to start with, I think choosing multi-cap, choosing large cap is more important than choosing a specific scheme.
Sure.
So
Okay.
I would advise a multi-cap as well, flexi cap as well.
So let's do the differentiation. Who should choose a multi-cap fund versus a large cap fund? Let's put it that.
To me, it does not matter.
It doesn't
I really, I mean, because it's very similar. When I have looked at current form, on the basis on which we look at current form, okay, I think the high growth companies just partially probably is a little points ahead in the manner and at which we look at the form.
Sure.
Gajendra could be looking at the form in a completely different manner.
Of course.
So,
Yeah, of course.
and the point that I am making is it does not matter as long as you please continue making those investments in a disciplined manner.
Yeah, I
I
completely
think
agree.
that's more important than choosing the exact right scheme.
Yeah.
Because eventually, Neeraj, the same fund will not have the same performance over the 10 years.
Agree completely. Yeah, but for the sake of our viewers, Gajendra, right now we have to try and
Of course.
give them why is it that the two experts on the show are choosing a specific fund, what are the reasons, and why is it that they're choosing the funds that they are choosing compared to the others, because there is a slew of funds out there. I mean, a lot of, even I would be confused, hey, as to why is it that this is happening.
Absolutely.
Now, my question to either of you is that, again, some data that we pulled out, since you mentioned the last 10 years, and I don't know if it's the man in form or the long-term nature, but the IDFC Premier Fund, 10-year returns have been staggering, and it's a multi-cap fund as well. I mean, any reason why again, I'm sure that you are not saying that IDFC Premier Fund is not
Premier
a fund which is
equity
comparable,
fund.
yeah, which is as good as the others. But any reason why you guys have not thought of this one?
See, for various reasons, Neeraj, IDFC Premier earlier when it started as a mid-cap fund.
Okay.
Okay, now once it has grown into size, it's
Okay.
around 6,000 crores,
Okay.
So, they've changed their positioning.
Sure.
Now it has become more of a value kind of fund.
Okay.
And it has a huge exposure in the large cap space.
Okay.
The fund manager earlier, then who was managing this, Kenneth, had quit, and that's why the new fund manager came. He repositioned the entire fund.
Sure.
So you have to give some time to see what is the direction in which they are going.
Got it.
Okay, and then maybe allocate money once again.
Yeah, well,
But
that's a fair explanation.
So that's the logic behind it.
Yeah. And again, I'm sure that none of our guests are saying that fund A is better than fund B or fund C. I think at the current point of time, as per their analysis, these are the funds, the two funds that came out are the ones they like the most. Okay, there is also a theme that we have, which is investing in mid-cap funds and small-cap funds. We've discussed large caps, we've discussed multi-cap funds. We have to discuss mid-cap and small caps as well, because I think what something like a DSP BlackRock fund performance did was suddenly get people interested in small-cap funds or micro-cap funds. Why not look at them? I mean, it's a sound fund manager choosing those funds and managing those funds, and people have made returns. So we thought it's very important. And again, from a perspective of somebody who wants to take risk, and please correct me if I'm wrong here, it falls right in that profile, right? You are happy to take risk. Why not go out for a small cap or a mid cap fund? So, one, is it relatively riskier? Yes, but is it safe to choose a mid cap and a small cap fund? Mr. Roongta, firstly to you. And within that parameter or that purview, what is the fund that you would advise viewers who are watching in right now to choose?
So again, as I said, everything in proportion.
Everything in proportion.
Right. So
what's the proportion? Let's say for somebody who started earning, what should a proportion be? Large cap, multi cap.
So I again always advise goal based rather than just a plain simple. So if your goal is more than 10 years away,
yes,
even whether you've started earning or otherwise, and assuming your risk profile is extremely aggressive, okay, then a larger allocation will be to equity.
Yes.
Right. And within that equity, I would still, even for that person, advocate a 30% large cap, 30% multi-cap, and maybe a 40% small cap.
So this is the largest risk profile investor?
Yes, even to the most aggressive risk profile investor with the largest investment horizon, 40% of his investment is what I would recommend to mid and small cap.
Mid and small cap.
So there needs to be some balance.
Some balance. Okay.
Yes.
Now before we come to your fund, just Gajendra, it's okay to disagree, by the way, because different people have different thought profiles.
Absolutely.
But what's the allocation that you would believe?
So
large cap, multi cap, mid and small cap.
Yeah. So I've been one of the beneficiaries of this DSP microcap fund.
Okay.
My last year 7-year SIP has produced 35% CAGR return.
Wow, that's astounding.
Yes. But for good 4 years, from 2010 to 2014, the per annum compound return was only 11%.
Okay, fine.
So you need to ride the cycle.
Sure.
So
Okay.
last 3 years.
Having said that, the allocation.
So my take is little different from him. If somebody is a new investor, young investor, 24 coming in, and though he may say that my horizon is 10 years, I would still not give him a mid-cap fund to start with, because he has not invested in mutual funds ever and he's coming for the first time. Okay, he doesn't understand risk. He may today very well comfortably say that my horizon is 10 years. But let's see the returns for 2 years, first 2 years. If the returns are negative, he will quit the fund.
Okay.
And this is what 80% of the investors do actually.
Yeah, but this is a proportion. I have 10,000 rupees. I want to split it into 3 categories. How would you bucket it?
So I may split 60-70% into large cap, and 20-30% in mid cap fund.
In mid cap fund.
Yes.
Okay. So that's the thing for a first time.
Let him experience the whole thing, and then maybe allocate money.
Sure. Okay.
If you see my own portfolio, Neeraj, it's heavily tilted towards mid and small cap fund, because I don't have to answer anybody.
Sure.
I can be there for 10 years. But if we are doing for investors, recommending, then we have to answer them every 6 months.
Okay, sure.
That can be a tricky
Don't worry.
situation.
To our viewers, you wanted to answer every 6 months for sure. But coming to your recommendation, Mr. Roongta.
So on mid and small caps, I think one of the things that we would look at is basically the fund size should not be too large.
Okay.
Okay. Most of the very, very well performing funds in this sector have grown dramatically as investors chase performance. They've just become too big. Some of them have stopped taking subscriptions. DSP microcap no longer takes subscriptions. A lot of the smaller cap funds have stopped taking subscriptions.
Sure.
Even the ones that are taking subscriptions but are large, are going to find it increasingly difficult
Sure.
to provide the same kind of returns that they have provided in the past.
Okay.
So the way we have chosen is we have looked at funds with a certain size, not too large, not too small, but not too large, and which have had a good performance track record. So that's why we have chosen L&T Midcap Fund and Birla Pure Value Fund. Both of them are of a not a very large size. They have had very decent performances. They may not be the top performers in their category, even by the way we look at the performance, but we have gone also by the size.
Okay.
We have just eliminated the ones that are too big.
Right. Again, ties in with his philosophy that don't just look at what the fund has done over the last 10 years, you also need to look at what the current dynamics of the fund manager maybe, the size of the fund all tie in, and as per that, Mr. Roongta believes that one of the funds that I have is that L&T Midcap Fund. The 5-year return 255%, 10-year return 350%.
I don't look at point-to-point returns at all.
But from a current perspective, he likes this fund. Now, your recommendation for a small cap fund and a mid cap fund. So you have two, Gajendra, if I'm not wrong.
Mid cap separately, small cap separately.
Let's have those names.
So mid cap
and why?
Yeah, mid cap. I'm going with Motilal Oswal 30 Focus 30 mid cap fund. My daughter's SIP is in that fund.
Okay.
Yes,
Okay.
and I've had again wonderful experience for the last 3 years since this fund came. The simple logic. If it is an equity fund, Motilal Oswal has a pedigree for that. They have been known as an equity fund house. Their focus is completely on equity funds. They don't have all other funds, in the portfolio. And they have been very selective in stock picking. It's a completely bottom approach, a focused approach, just 30 companies, 35 companies maximum, and very well researched. They're going to hold for next 3, 4, 5 years, So it's buy and hold kind of strategy. So the churn is less, the portfolio turnover is less. Today, as we speak, the fund size stands at 1300 odd crores, which is again very reasonable size to manage that kind of a thing. So I would clearly go ahead with the Motilal Oswal 30 mid cap fund. And of course, the last one here has not been kind to them. They have just delivered 20% return, while the Nifty mid cap index has given 30% return.
Sure.
They have not even been able to beat the category, but that is how mid caps works.
Sure.
Because your set of stocks can be completely different from mine.
Yeah, of course.
And there's no
So invest for the long term.
You invest for the long term.
That's one. What about the small cap?
Small cap fund, I would go with Kotak Emerging Equity Fund. Again, today, Neeraj, frankly speaking, there are no really small cap funds available which are open for subscription in the true sense.
And which is why DSP BlackRock doesn't make the list?
So DSP BlackRock, of course, if it is not available for subscription, the viewers cannot go and invest.
Sure, which is why it doesn't make the list.
Yes.
Otherwise, you guys would have been happy recommending that.
Not
as well.
me.
Not you. Because
it's
of the
just
size.
too big. It's just
Yes,
too.
the micro cap fund
Yes.
has become too big.
Too
yes.
big. Okay.
Yeah.
So that moves out of the list
that
because
moves
of
out
that.
of the list, yes.
Okay, fine.
So the Kotak Emerging Equity Fund, though it has a small cap right now exposure of 20% only, because there are not very much opportunities. It's more of a mid cap fund right now as we speak.
Sure.
But I'm still comfortable with the fund because it has again a 10-year history.
Sure.
Again, it has beaten consistently. Pankaj Tibrewal, the fund manager, has had a very decent track record. And as a fund house also, they had both mid-cap funds and this very clearly positioned. So this falls into the small cap space and has done pretty well. So I would go ahead with the Kotak Emerging. Again, the size is little less than 2,000 crores, which is still manageable.
Still manageable.
Yes.
Okay. So one sense that I get from both of you, and I have a couple of questions that have come in from viewers that I want to ask you as well. But one sense that I get from both of you is that you are choosing funds which are not too large in size because they become relatively easy to manage.
In mid and small
In
cap.
mid and small cap for
Because
sure.
Neeraj, you have to see today we are just seeing the one-way market.
Sure.
If
What
the
if
market
it comes
falls
down?
and
Sure.
there's no liquidity, then you need to see the impact cost on the stock price,
the
and
stock.
then the returns crash.
Okay, fair call. Now, Mr. Satya Subhash is asking, there are two questions. I'll ask one to each of you. You can probably choose, both of you can choose to recommend this. But any of you have an opinion on the Mire Emerging Blue Chip Fund?
Yes.
You do?
It's
okay.
It's again a fantastic fund, well managed, well run, has a very consistent performance all throughout. Nilesh Surana has had a wonderful track record, but again it is closed for subscription.
It's closed for subscription.
Yes.
Okay.
So you can't really go out and put money there.
Okay, Mr. Subhash. So if you have an existing investment, it's
Yes,
good
then-
to continue.
Then you can top
I think
it up.
SIPs continue. Right?
Continuing up till 25,000, you can still do an SIP if you're an existing investor.
Okay.
But if you're a new investor, then it's closed for subscription.
Okay, so if you are an existing investor, if Mr. Subhash is an existing investor, you would
stay-
advise to stay put with an SIP as well.
Yes.
Would that be your advice to Mr. Roongta? I mean, have you looked
no,
at the fund?
I have.
Yeah, I mean, okay. Have you looked at, okay, this is a simple one. I think we've answered it, but repeat for Mr. Satya Subhash. He is asking you to suggest an equity fund through an SIP for 10 years. He has a 10-year view. I don't know whether he wants a large cap, mid cap, small cap. I don't know what his risk profile is. But assuming that he is okay taking a little bit of risk, a 10-year SIP.
So if he just wants to take a little bit of risk, okay, let him just buy an index fund. I mean, that's the easiest, safest. He doesn't need expert advice to go buy a Nifty index fund or a Sensex index fund. He gets the returns of equity. Mind you, well managed, active managed funds have given better returns than an index fund. But for that you need the help of advisors and other people who would advise you. If you don't want to do that, if you just want to invest in equity, participate, and you're willing to systematically invest and keep at it for 10 years, you can just take an index fund. And in an index fund, the easiest index fund to do is with the lowest expense ratio. I suspect that would be IDFC Nifty index fund. If that is the choice that he wants. If he wants to go in for active, then he will have to actively manage funds. He will have to do a little bit more effort. And then we come back to the recommendations that we have given. So whether it is a large cap or a multi cap, those recommendations are already there.
Any last thoughts, Gajendra, on this an SIP for 10 years?
So I would still say go for a balanced fund if it doesn't want to take risk. Though we may say balance fund has 35% debt and 10 years, whether it makes sense. But if you see, actually, most of these balance funds, which have been there for 10 years, they've given amazing returns.
Actually, S. Narain was on the show. The inaugural episode of the show was done by S. Narain, and he said that this is the right time to actually start investing in balance funds, as opposed to pure play equity funds.
Precisely, because many of these first-time investors who are coming, they may have a little bad experience in 1 year, 2 year time down the line if the markets don't perform as per the expectations. That is where balance funds score, better compared to a pure large cap or a mid cap fund. But even on a 10-year horizon, most of the balance funds, risk adjusted return has been far better than the large cap equity funds. The returns in large cap or mid cap funds have been 1 or 2% higher, but with a far more higher risk. Balance funds nullify that, So you can have a smoother ride with almost similar kind of return expectations.
That's sound advice as well. Just to recap, viewers, before we wrap up this show, they're saying that anytime is a good time to invest in funds. Even now, if you want to start an SIP, probably do a lump sum as well. It is not a bad time if you have a long-term horizon. If you have a goal-based horizon, then you'll have to figure out, and that is something that we'll do at some other point of time. This show was dedicated towards somebody who wants to take a little bit of risk, or actually max amount of risk, and invest in mutual funds. We'll do a goal-based, theme-based investing show as well at some point of time later. But just a quick recap. From a large cap fund perspective, Mr. Roongta recommends the SBI Blue Chip Fund. He's not saying this is better than the others, but as per his analysis, this is a good fund to go into. For a multi-cap fund, the Franklin India High Growth Companies Fund, and for a mid and small cap fund, he recommends the L&T Mid Cap Fund. Gajendra Kothari recommends buying a multi-cap fund over a large cap fund, and in a multi-cap category, his recommendation is the Franklin India Flexi Cap Fund. On the mid cap and the small cap side, for the mid cap end, he recommends the Motilal Oswal Focus 30 Mid Cap Fund, and on the small cap side, he's recommending the Kotak Emerging Equity Fund. Hope you've taken notes on all of those. Of course, the show will be on social media all through this week as well, so you can catch a repeat on the click of a mouse pad or a mouse. So that's something that you anyways have at their hands. But gentlemen, thank you so much for taking the time out and joining us and giving us those recommendations. It was a specific risk profile set that we needed, and which is why I'm glad we got you, and look forward to have continued participation from both of you on the show as well. And viewers, thank you for tuning in to Bloomberg Quint to watch the Mutual Fund Show.